Good morning, good evening, good afternoon, trader Steve here at Logic FX Trading, and welcome to our trading room recording on, is it Tuesday? Wednesday the 14th of July 2021. Bastille Day. Happy Bastille Day to all you French people out there. I doubt that any of you are listening to me, but have a good day. Let's have a quick look at what happened yesterday, guys. We had German inflation and then core inflation in the United States. The German come in as expected. No fireworks there. These come in higher. Now, what did we say yesterday? We said if they come in higher than expected, you can see the dollar going long. And if they come in lower or as forecast, you could possibly see the dollar going short. Now, this is the composite pick a word. This is the combination of fundamental versus technical, guys. Technically, it looked like it wanted to go short because we're in an ending diagonal, and then the fundamentals come along and possibly put paid to that. But when we go and look at the chart, it didn't actually break out of that structure. So what do we do? Well, that's the big question, and we'll try and answer it as we go through. Just while we're on the economic calendar, today we've had Westpac Consumer Confidence Index in Australia come in at 1.8. We didn't have a forecast, but it's slightly higher than previous, so I imagine that's good for the Aussie. Interest rate decision in New Zealand came in as forecast, which we expected. But remember, at the moment, no one's actually moving their interest rates, or none of the major players are moving their interest rates. But it's what they're saying the timeline of that is, and what they're doing about their bond buying or their QE. Let's just call it QE, guys. What they're doing about their quantitative easing, their money printing. And what happened overnight was the New Zealand dollar took a nice spike up. Nice spike up if you were trading it in the right direction, guys. But I didn't. And we'll look at that chart in a minute. I took the Aussie New Zealand long yesterday, and it's turned out to be the wrong thing to do. But that's it. I was going to say it's good because obviously it isn't good to take trades in the wrong direction. But from an instructional point of view, from helping people understand how you deal with problems, then, it's good for us because we've something to talk about. How do you deal with it? How do you react to it? What do you do about it? So we'll have a think about what we're going to do about those situations through today's recording. And then UK core inflation rate come in at 2.3, forecast 2, so it's slightly up. I did say yesterday that when you go out in the street here in the UK and you're buying things, they're up, but obviously not the sort of levels that you're seeing in the US at the minute. So we'll have to see if that moved the pound or not. I don't know. Remember, this is my first look. And then inflation rate come in at 2.5, up on 2.2. So possibly good for the pound. Remember, things don't always react the way you would expect them to, but I would expect a little bit of a move up in the pound because of that this morning. And then later on today, we've got Bank of Canada interest rate decision. So that will do this for our economic calendar. So we'll have to see what happens there. Did say there's a lot of information coming out this week, guys. Sometimes you go through this and there's nothing much to look at. Okay, let's get over to the charts. NASDAQ moved up yesterday, guys. It's continued this move up. Listen, there will be a correction at some point. Despite the fact it's moving up, my account's going the wrong direction. And as we talked about, I was heavy into the NASDAQ through the first 6 months. And then I started to cover myself because at some point this is going to give a big correction, guys. The problem is that you set yourself up for the correction, and then by getting some insurance policies into the account, with mates being gold, and then for a period of time it looks like you've made the wrong decision. But you got to live with it, guys. You can't just suddenly change everything and chase the direction that things are going in. This should correct at the minute at some point. When it corrects, then we've got to make a decision. you go through the process as we did there and the whole way back for the last lot of years. We've been doing this for like 3 years now, guys. Only been putting it out on YouTube recently, but we've been doing it on the website for a few years, 3, I think it is. We'll go through the process of what's happening, see how it develops, and then at some point we decide, okay, it's time to get back into the Nasdaq, or hey, listen, this is going for a drawdown. We'll have to see how it happens. But look at the individual stocks, guys, and what their technical charts look like, and then obviously fundamentally you have to know why you're actually buying a stock, guys. And we will go through all of that, and I'll put some of that on YouTube as well, folks. Okay, so if we got something like that, then I would look to trade it up, unless the fundamental reasons why that was happening, in other words, bond rates were shooting up, the expectation of interest rates continue to go up, and therefore, earnings would be badly hit, particularly by those companies that are in growth, who are borrowing billions of dollars to reinvest. Their costs start going up, guys. So, and then their bottom line gets hit because of the increased costs of borrowing. So you would see a move like that. That's not going to happen today or tomorrow, guys, but it's what we're keeping an eye on. And I'm not suggesting that's going to happen either. We're just saying if that were to happen, then we would be put in a position where we decide, do we want to continue trading up, or is it the start of the big drawdown? Now we go out a little bit and we have a look at this. It's been going up and up and up and up and up, guys, at a tremendous rate, a rate that I don't think we've witnessed before. And that was the original, the trend line over, was that 10 years? Was it? Well, it's in 2016 for the 5 years. You could probably extend that further on down, guys. You can see that's similar trend to that line. And then all of a sudden we've had this breakaway. Now, when you get a trend, and it does that, more often than not, it'll come back down into trend, guys. So you'll get a correction back into trend. So that's the reason that we're talking about this. It doesn't necessarily have to come back into that trend. Maybe we established a new trend for a period of time, and it will certainly at least correct back into there. Maybe it corrects a little bit further, and maybe even a bit further down. But listen, don't be worrying about that just yet. That's not on the cards just yet. But technically, over the period of time, you will see that coming back down again, guys. And you just have to go through any, let's look at gold, you got silver, look at Bitcoin. On a high time scale. There you are, it went way up. Where did it go? End up coming back down again. Silver on the higher time scale. Way up it went. End up coming back down again. Bitcoin. We all know about Bitcoin, don't we, guys? Went way up there, came down again. Went way up there, come down again. Went up there, come down again. It's gone up there. Where does it have to go? Well, at some point, it's going to end up down in here somewhere, and that's when it'll be worth buying. Do we definitely know that? No, we don't definitely know it, but, these things are all, this is human interaction, guys. This is what human beings are doing, and human beings don't change their behavior when you're talking about millions of them, folks. So eventually the Nasdaq will correct. So will the Dow Jones. Yet again, you can see there was a trend over 11 years, was it? Yeah, from way back, 09 is that? 09. That was the crash back then, do you remember? Some of you mightn't do. And then off it's gone. It'll correct, guys. It'll come back down again. Not necessarily right back down to there, but it'll certainly correct back into trend at some point. S&P, same thing. There's the trend, guys. Up through there. It's pulled away from trend. Eventually it'll break back down. But we're not we're not saying it's happening today or tomorrow, guys. But you will have a correction. Maybe it's next year, maybe it's the year after, guys. But you will always get a correction. Look, up it went, back down. Up it went, back down. Up it's gone, up it's gone, up it's gone. From a way back here, I was calling these corrections. And to be honest with this one, when we got to here, I was looking for this to correct. And it did that first, and then it came. But it came 50%, guys, of the previous 10 years was corrected in a few weeks. Let me move this out of the way, folks. In a few weeks, 50% of what had gone up for 10 years. So in other words, if you had invested your money back down here and left it for 10 years, you'd have lost half of it if you'd have done nothing. You'd have lost half of it in that period of time. And fair enough, with hindsight, we can look and go, hey, but if you'd held on to it, look where it got to. You've doubled it again. But how many of you would have held on through that? There's the big question, guys. Nikkei. Let's get back down. Let's start talking about where we are today, folks. This is still in this corrective structure. The big question with this one is that the impulse, and now we're going to correct deeply? I don't think so. I think that's probably still the trend there, guys. Doesn't mean that today it's going to go long, but you would expect a structure like that to break out if trend is still in that direction. The only reason why it would break down like that would be if that was the end of the upward trend and we're starting a bear trend, which I don't think we are, guys. I think this is a correction of that move up. So it's correcting that move because it went too fast. Correcting back down again. Things were overvalued and it'll get ready to go again. UK is still undervalued. We talked about it yesterday. I don't want to repeat everything every day that we say. It becomes quite laborious for those people who are watching every day. But there's where we were before the crash last March, and we haven't reached that yet. So UK stocks are still undervalued, guys. French, same thing as with the Nikkei, having a nice correction, but look at that move over the last few days, guys. In fact, it was at the 9th, yeah, that's this week. Last 7 days, let's call it that. And then German, it's come up. It's hanging around that little double top position there. I think there's more upside to it. I'm not saying jump in there, guys. But if you were trading the index, you'd have to wait for a pullback to get involved in it. Never buy at a breakout, guys. Chinese, there's problems going on with the Chinese at the minute because of government intervention, basically. I'm a little bit concerned. I have one Chinese stock, which is Baidu. And I saw a story this morning on Bloomberg. They were saying they're looking for Chinese stocks to continue to drop, guys. But remember, there's where they are at the moment, that red line. I'm expecting more downside to it. From a technical point of view, guys, what we basically do with this? That's roundabout correct. Remember the equality or equilibrium. So if you get an impulse and it pulls back, you'll usually get another impulse down there. It's called a zigzag. And then off you go. You don't always get them. They don't always do what you expect them to do. But when they do what you expect them to do, that's when you need to start thinking about trading them in the opposite direction. And the, what's this? This is a Russell. Got this thing in the way. Oh, the Aussie 200. Running flat at the minute, guys. This is the channel at the moment. Wouldn't be surprised if it's, you know, sometimes they just run flat over to the trend and then they go. Doesn't have to, you know, but that's the trend line at the moment. We'll see what happens. You could get a drop in the trend before it goes. But if I was going to trade this index, which I don't trade, but, you know, just from my point of view, the technical side of this particular, of a chart, as it were, I would wait for price to get over close to that line, whether it does it over there, or whether it does it here, and then look to trade it up. The Russell still running flat, guys. If you traded this chart, you know, if it were to get down into there, you could always look to trade it long again, guys. DXY, okay. This is the most important currency chart out there, guys. If you get this one right, you get everything right. Now, what we said yesterday was that this looks like an ending diagonal. You've got divergence there, okay? You've got it going, you have an impulse, it pulls back, you get a new high, it pulls back, you get a new high, and then with a high degree of probability, when you see your MACD doing this, you get a drop. What we said yesterday was that because of this number here, which these numbers weren't out when we did the recording yesterday, we said that this could kind of either be the catalyst that makes it drop, or it could spoil the party. Well, as it turned out, it spoiled the party, guys, because they were higher than expected. So what actually happened was, if we zoom in, we get into the 1 hour time scale. Is that we got this move up. You see the big sharp move there, and then it came back. At that point, I took a little bit off because I've been trading this short, guys. I took a little bit off just in case it pushed on up and it's come back again. So I'm a little bit concerned about this. Underlying, I'm saying, you know what? The technicals often play out for me. Particularly an ending diagonal, if that's what this is, and I think it is. It's come up. It's formed a little double top. I'm still hoping for a dive in this, a drop in this. Now, I doubt that that's on the cards at the moment. You know, the move right down. But I would not be surprised if this dropped down into maybe the 50% retracement level. Let's just pull this in. This is set up for the 4 hours, guys. So, okay, let's just leave where it is. 50%, yeah, maybe even a little bit lower than that. Down into there. So, because I'm already in it, I got in around here somewhere. Obviously, we're in the red at the minute with it. So what do we do? Well, there is a danger that I'm wrong. Okay. There's a danger that I'm wrong. So the thing to do with it is to put a stop loss up here. I'm not saying exactly where, guys, because that's not how I trade. I'll look at it personally and go, I'll put it there, but a little bit above there. Now it isn't out of beyond possibility that this spikes up a little bit before it goes. So there is possibly that. So you've got to take that into account. But because of where I get in, which was down there, if it goes much higher, I'll just knock it in the head, guys. Remember, you're only putting 1%, 2% of your account into any individual trade. So if you get drawn down by 10% of that, it's 0.1% of your account. So it's not the end of the world if you get something wrong. And the reason why you end up trading like that is that the longer you trade, the more often you realize that if you put too much into a particular trade and it goes against you, it crushes you in two ways. First of all, it becomes such a big deal emotionally because it turns out to be either a large amount of money or a large percentage of your account. And secondly, if you continue to do that, your account will end up running out. Remember, I'm going to do a little bit of teaching here, guys, because this is on YouTube. For those of you who've been listening for a long time, move on. If you draw down by 50%, if you get your account drawn down by 50%, you've now got to make 100% to get back to where you started. So how does that work? Let's say you have a $10,000 account, guys. And it drops by 50%, and you're now sitting with $5,000. You've got to double that 5,000 to get back to 10,000. That's 100%. So you've got to make 100% to get back to where you started. So losing 50% of your account, guys, you can't allow it to happen. And the only way that happens is by over trading, by either using too high a leverage or using too big position size, guys, and being greedy. And certainly you can say, hey, well, if it goes right, then, you know, I'll double my 10, was that 10,000 or 100,000? Yeah, 10,000. I'll double that. I'm going to make 20,000 this year. Guys, that sort of thinking, sometimes it comes off, but it's just like going to the casino. Sometimes somebody wins, but most of the time, most of the people lose. And what, you know, if you don't believe that's true, then trade the way you're trading. Remember, I'm just doing analysis here. I'm not actually talking about trading strategies. You know, I'm not going into the details of my trading strategy. I'm giving you an overview, guys. If you think you're going to double your money in a year, and it is possible, but it's only possible with a lot of hard work and understanding of what's going on and the luck that the market moves in the right direction with the right amount of momentum, guys. It is possible, but it's not probable. And you always need to deal with probables, not possibles, guys. It's possible that you'll go out and you'll buy a lottery ticket and you'll win, you know, $10 million or $100 million. It's possible, but it isn't probable. You've always got to deal with probabilities, guys, not possibilities. Okay. So if you allow your account to drop by 50%, you've now got to make 100% just to get back to where you started. So don't allow that to happen, guys. And if you go over here and you look at my account, now remember, the more conservative you trade, the lower your return's going to be. But at the same time, the higher your safety margin is and the lower your risk. And if you look at these figures, and these are deliberately tight, guys, because it's a training account. We're using it to show you guys how to learn to trade. And once you know how to trade, you can then make your own informed decisions about what level of risk that you want to take. So we've been keeping it tight the whole of the year. Maximum drawdown, 5%, guys. Not 50% or 20% or 30%, 5%. That's not hard to get back again, guys. But if you allow it to run the 30 and 40 and 50%, what you'll do is you'll start to gamble more and more to get your money back, and you end up broke. Okay. So let's get on with it. Let's get on with it. So what do we do about this dollar? Well, going to keep an eye on it. It's starting to drop off. Treasury yields ease after an inflation spike. So there you go. The yields are coming off, guys. It was a spike yesterday because of the inflation figures, and they're easing back off again. So the 10 years down, the 5 years down, the 2 years down, and the 30 years down. And that's reflected in this, guys. Now, is that going to continue? I don't know. But I suspect I'm going to run with the technicals on this one, guys, and on the higher level that we're in this flat period, okay, and we're near the top range. So I'm going to run with that and continue to try and trade this short. Okay, euro. So there was the drop yesterday. So what we said, listen, if you want to be super safe, wait for this to break out, then give you a setup and then trade it up. And obviously it went in the opposite direction. So anyone that jumped into it yesterday, you'll be in the red with that particular trade. But what you've got to decide now, well, is that going to continue or is it going to eventually break out? I suspect it's going to eventually break out. But if you're uncomfortable with it, then put a stop loss in, guys. And if it gets stopped out, forget about it. Until we get to the stage where we go, do you know what, guys? It's turning and it's going to break out. And then you can buy into the same trade again. Pound. Same thing. Now, there's a little spike up in the pound. That will be because of the numbers that come out this morning, guys. Where are we? Core inflation being a little bit above what was expected. It's not a huge move, as when we talked about it, as we said, it wouldn't be a huge move. But there is a little bit of a move up there. We'll gather a little bit more information about the pound as we look at the other charts, because remember, this is against the dollar, and that's the same little move we have in the dollar, so it might just be because of the dollar. Aussie, no big move in there, guys. It's pulled down a little bit, shows you the strength, potential strength of the Aussie. Could well still be looking for a breakout there. New Zealand moved up, guys. That was the interest rate, whatever they said about their interest rates over here, guys. That's where were we? Yesterday, wasn't it? No, this morning. Yeah, early doors. They didn't actually move the interest rate, as you can see, but whatever they said, and I haven't come across it yet, guys. I don't have all the information all of the time, but you can just tell from the chart and what's happened here. You say, well, something's moved the market, so it will be whatever the speech, whatever's been said in the speech, whatever information was released at the time when they said, here's the interest rate decision, and here's the explanation of it. Okay, you know, when you're trading long enough, you can read these things, guys. I explain them because I'm talking to you guys, but I would ordinarily just look at that and I'll go, right, let's see. And if I was interested in trading the New Zealand long, I would go and find that information. But at the moment, you know, it might become important to me later on in the day. US CAD. Yeah, well, if the dollar drops, we should see something like this. I don't see oil dropping from where it is, guys. It could run flat for a while, but I don't see it coming off, what is it, 70? Let's have a quick look. Now, oil's not the only thing that moves the CAD, but it certainly does move the CAD. And it also moves the dollar, by the way, but it's not as important for the American economy as, you know, as consumerism, etc. Well, there's the oil price there, guys. What is it? At the moment, $74. I knew it was around 70 somewhere. This could end up running flat. Now, if you're trying to trade oil, then that's not much help to you. Unless it comes back down, then you'd probably trade it up confidently. But what I'm saying is that from a point of view of the earnings, whether it's Norway, whether it's Canada, or whether it's an individual oil company, whether you're trying to trade BP or Royal Dutch Shell or whatever, you're not looking for a massive decrease in their revenues from oil, guys, unless there's, you know, some other reason why they've cut production. But the revenue should stay high because we're not expecting oil to suddenly come down to $60 or something like that, guys. Well, let's go back. And by the way, if you want to ask me any questions, if you don't understand something, I'll gladly explain it, folks. And I know there's only a few of you at the moment. This is the marketing process. It's going to take us a while to build this up, guys. Okay, US Swedish, there's a little spike yesterday. Was kind of indicating there that there's possibly a little double top going on there. It has broken. So I'm a little bit less, you know, inclined to call that short. So let's see if it starts to come off. If it starts to come off, then maybe we look, you know, it could end up running flat. So you could possibly have a trade down to there, guys. But yet again, this will depend on what the dollar does. Now, the conversation about those numbers yesterday, because obviously I was very interested in it, because I was in it in the wrong direction. So you know, and this is the thing about making a mistake in trading, guys. When you make a mistake, you learn an awful lot more than you do when you get it right. Because when you get a trade right, you get the trade right, you feel very smug about yourself, and then you move on. But when you get something wrong, you learn, why did that go wrong? You know, what happened there? What was the reason that moved in that direction when I thought it would go in the other direction? Why did I lose so much money in that trade? That's when you learn, guys. You always learn when things are painful. You never learn very much. Not saying you never learn when things are going well, but there isn't much learning in getting it right. All the learning is in getting it wrong. So your attitude when you get something wrong is, don't panic, don't fret, but learn something from it. Okay. US yen. Still looking for that move down there, guys. We'll see if it happens. It may not happen. Obviously, I'm not jumping into it today. I'm not jumping into any of these trades today until we see how the market's going to react. Of that one trade on, as I said, of that one trade on, I'm not going to risk anything else. When the times that we trade a lot with the currency is the time that we've got a pretty, high probability that things are going in that direction. There's a trend and it's going in that direction and we're on it. And you really make hay while the sun's shining, guys. But the sun's not shining at the moment. So we're clawing our way through here. And you go through weeks and you go through months like that, guys. July's been a tough month. And if you think it's a tough month for me, with a drawdown of 0.86%, and that was all yesterday. It was 0.2 or something yesterday. So we went down 0.66% yesterday, which, because of the way I trade, that's a disaster for me. It's not a disaster, but you understand what I mean. But what you need to do also is you go and you get into, say, go and see other people that are, known good traders. And Jay Nemesis is the most copied and most followed trader on eToro, with approximately $100 million following him. And there's an incentive for you guys that want to become copy traders. $100 million at 2%. Sometimes it's 2.5%. If he makes 1% per month, you'll get a 0.5% extra. Just call it 2% on 100 million. That's 2 million, guys. It's 2 million a year. Okay. Let's look at his stats. Yeah, down 2.11%. Now, his total's a lot better. It's almost double mine. And obviously, the years before, like last year, he did tremendously well, which is the reason why so many people are following him. But we're just looking at currently this year. Remember, I only started trading stocks this year on this account. Obviously, I've got other accounts, guys. But on this training account, we started trading stocks this year. But I've only put 50% in, where he has using 97, 98%. Yeah, he's 1% cash balance. And if we go over to mine, now remember all this, you're learning all the time, guys. No matter long you've been trading, you're always learning. So if I go over to my portfolio and I go down to the bottom, I've 48% cash. And it's been like that. It's been approximately 50% cash for the last 6 months. So I can put that down to the difference in his performance and my performance over the last 6 months, guys. But you can see there, I just keep an eye on that particular trader and others. I keep an eye on the rest of them to see what they're doing. But a lot of them are trading things that I wouldn't trade, Bitcoin and Ethereum and one thing and other, guys. But just keeping an eye on that, because my trading style with stocks is pretty similar to Jay's. 2 million, 1.9 million followers, 30,000 copiers, guys. You can see it's dropping off because people who come in a few months ago aren't getting the return, so they're fed up, they're away, or they've blown their account. Some people, you're only maybe 10% of your account you're copying, and the rest you're trading yourself, so maybe they've blown their accounts. Corsair, that's one that I'm very keen on trading. I did quite well on it recently. We'll talk about it in a minute. What was I looking for there, folks? I was looking for statistics. Yep. You see, yearly 12%, 9% and 5%. Those figures they're not double mine, but they're slightly more than double. But you can see where, and then the risk scores higher. And I think that's down to the cash situation. That and that's you can almost see that I'm sitting 50% cash, and all of my numbers are half of his approximately. So if I went 100% in, you would probably find my numbers would start coming out like this. but then possibly we would have double the return for the year, which is fine in hindsight, guys. But if the next 6 months are going to be a nightmare, then it's going to turn out that I've had the right strategy and his strategy for that 6 months was wrong. But we don't know. We'll have to see how it pans out. But it's just a good idea to keep an eye on your statistics compared with someone else's. Look at what they're trading. Don't just jump in and follow everything they're doing, but have an idea of what they're doing, consider what they're doing, and then pick up a few little bits from there. Go and look at what someone else is doing, pick up a few ideas from there. If they're trading something, go and look at the stock, go and look at the fundamentals of the stock, look at the chart at the moment. If it's just spiked up, it's not a time to get into it. You got to wait for a correction on it. So there's lots and lots of stuff you can pick up from other people's accounts on eToro, guys, which is the reason why it's such a brilliant resource for trading, folks. Okay, let's get on with it. I know this is drawing out, guys, but I just say what comes into my head, and then you guys determine how much you want to listen to. So US, China, that's a nice little move down this morning on that. Notice we didn't get the big spike up yesterday. So this is possibly still on. And the Swiss, we were looking for a drop here. So it's possibly still on. And what would really accelerate this, guys, is if the dollar did drop, then gold price would go up, which would give a boost to the Swiss. So you get a double whammy here. So you could get a really nice trade in there. But it's all if, remember, it's if the dollar drops. Gold, it's still in this little corrective structure here, guys. It's certainly not an ending diagonal because there isn't any massive divergence over here. There hasn't really been much movement, to be honest. Remember, we're on a 1 hour time scale here. So I'm still looking for this to move up, but there is always the danger that we get the downside of that zigzag. And if that happens, then I'm not going to see any profits for this month and possibly not even next month. Hopefully we can hold things steady. But what's been holding my account back over the last month is the decision I made last month to put about 10% of the account into gold as an insurance policy against the NASDAQ dropping, guys. And so far it hasn't paid off, but insurance policies, you know, don't always pay off. But if it does pay off, then we'll do nicely out of it. But we might have to pay a few more premiums before it pays off, guys. Silver, remember, don't take any trade on its own. Trades are always part of a system, guys. It's not just trade that and then forget about it, and trade that and forget about it. It has to be all part of a balance, which is hard to get right. But you know, we work on it. Silver, same thing. Looking for it to go long, guys. I've got a couple of little SLV trades on. Nothing to write home about, but because of the size of my gold position, I don't want to push the boat out too much in silver at the moment. But if I see it starting to go, I may well put a bit more money into silver. Could see a bit of a downside to it. If it came to there, I'd certainly be looking to add to the position. Bitcoin, as we said, I think it's going to continue to drop, guys. If you're in Bitcoin, and yet again, if you're going to trade it, it needs to be a percentage of your account, not 50% or 60 or 70. It needs to be 5%, 2%, maybe even 10%. No more than that, guys, because if it goes wrong, it'll drag your whole account down. If you're interested in getting involved in it and you're not involved in it, maybe you get involved at this level, but you're going to dollar average it, guys. In other words, if you wanted to put, just use a round number, if you wanted to put $1,000 into Bitcoin, don't put $1,000 in there, put maybe $200 in there. If it drops a bit more, put another $200 in, and eventually you'll get your $1,000 in but you're dollar averaging down so that your average comes out around there. So if it drops any further, you don't have so far to go to get back to break even, guys. And then as it comes up through here, you're starting to, make some good money. If you put $1,000 in here, using 1,000 as an example, it could be $10,000, it could be $100,000. I don't know what size your accounts are, guys. But if you want to put, your $1,000 all in there, well, fantastic if it goes long from here. But if it drops from here, you're going to panic, and your $1,000 will drop to, $600, and then $500, and then $400, and then you'll go, oh my goodness, this has been going on for months. I think it's going to drop again. I'm taking my $400 out, and I assure you, 3 days later, it'll do that. Not necessarily 3 days later, but you understand what I mean. You'll look back then in months to come, and you'll say, oh my goodness, it's double what it was. I shouldn't have got out. Does that mean that Bitcoin can't go to zero? No, it doesn't mean that. It can go to zero. Things do go to zero, folks. I don't think it's going to go to zero. But, the longer you're in this game, the longer you know that things can go to zero, which is the reason why you don't put all of your money into the same thing. Oil. Talked about it already. I think it's going to run flat. EuroCAD. Yet again, if we can get a direction on the dollar, it will give us a direction in the euro, which would possibly be up. But look at how it's been running recently. I don't particularly want to trade that. There was a nice move there, which I didn't get. It's, so how long was it from the last nice move? It was 92 days. It was 3 months, guys. I suppose you could bring that one in and say it's 2.5 months. But because you got that, doesn't mean that today, tomorrow, or next week we're going to get that. It could end up running like this for another 2 or 3 months, and then we'll get a breakout like that, 1 or 2. So I wouldn't want to trade that. Euro Oz, there yet again, same move. So it's been a move on the euro because we've seen it on 2 different charts. See the same move? It was a move on the euro. So we should have seen the equivalent move down on DXY at the time. Not. Where was that? What date was that? 6th of July. Let's have a look at 6th of July on DXY. Now this should go short. 8th of July. Sixth of July. Oh, there's it there, guys. Didn't happen on the same day. There it is there. And then we go back to the euro. There it is there. Obviously, this is zoomed in a little bit more. There's that move there, guys. See, it's in the opposite direction of that DXY move. And there it is again. And there it is again. And where is it against the yen? Where's the 6th? 8th? That's interesting. Moving it up the opposite direction with the yen. Am I right? Yeah. Moving the opposite direction. See, there it went up. There it come down. So there must have been a strong move up in the yen there. Let's go back to the 6th. Just do a little bit of the technical part. Oh, there's it. 1st, 2nd, 7th, 6th, 7th. There was that strong move in the yen, which pulled that down despite the fact that the euro had gone long. So against everything else, the euro had gone long, but against the yen it dropped. So what's it going to do next, guys? Well, I'm still looking for it to break out. But I'm wary because of that whole yen thing there, guys. I'm looking for this. Now, these things don't always come off, guys, but I just get the feeling that we're going to get a push up in the yen. Maybe I'm wrong. maybe I have to give up on this. If we don't get a breakout here sometime soon, I'm going to give up on the idea of it going long there, because there is always a possibility. If I had that down, pull back, and this could be part of the other side of that zigzag. In other words, it could come down into there. But I'm not trading it at the moment anyway, so let's just keep an eye on it. Euro Swiss. Would love to call that long. Technically, that's what it looks like it wants to do. But if we go back to the gold price, if the gold price pushes up, then it wouldn't want to trade against the Swiss. Pound euro. Little bit of a push up today on the pound. Is this going to be a breakout? I don't know, but I'd wait for a pullback first, guys. There's where to trade this from. Or if it turns out that set pushes up on a little bit here and it's the start of some sort of breakout, then you're going to have to look for something like that, guys. You've got to be patient when you're trading currencies. Now, remember, I'm only back from being off more or less for 2 or 3 weeks. So I'm not going to be rushing into anything here, guys. We're going to analyze it. We're going to get, get my mind around what's going on. And then as part of the process, at some point, I'll say, okay, that's potentially a good trade. And what I'll do as well is I'll do a little summary with these for any of you that are actually still listening. Pound yen, looking for it to go long. Yet again, it's that little thing on the yen there. Let's possibly Aussie yen. Now, the reason we put this in was that idea that potentially we're going to get a bit more downside on the, a little bit more upside on the yen, which would maybe pull it down a little bit, give us a 50% retracement of the move up, and then that would be a nice, safe place to go long from. Can it go long from here? Can, but I wouldn't want to jump in there, guys. Aussie, New Zealand. Now, yesterday I said that this may just continue on up, particularly if there's a bit of negative news about the New Zealand. Well, obviously the news come out the opposite way around, which is the reason why it's always dangerous to trade the news before it happens, guys. Wait for the news to happen. Wait to see what the market thinks of it, and then make your trading decision. Don't try and predict the news, guys. So we're going to sharp move down. The little trade that I opened is now 10% drawn down. So what am I going to do now? Well, it's kind of come down into that previous low. It's been running kind of flat for the last lot of weeks and months. So I'm going to say that the odds are that at some point over the next few weeks that this will move back up again, guys, as it did there. But it's going to be a long, slow process. And if it does that, when we get back to there, I'll probably just take the money off. If we look at how it's been moving, every time we get a sharp move, it goes back up. Sharp move down, goes back up. We've got a sharp move down, guys. I'm hoping it's going to come back up. Got myself in a little bit of a problem. Possibly put a stop loss across there. If it goes any further down, we take the hit, basically. Aussie Swiss. Now, that's interesting. There's that same move. Was the move on the Aussie and not the New Zealand? Let's go and look at the New Zealand. That's the 7th. That's the 13th. New Zealand. That's a little bit of a positive move. Where's the other Aussie pairs? Let's go and look at the Aussie dollar. Now, Now, with that move on DXY yesterday, I would have expected a bit more of a sharp move down here, and we didn't get it. And that's because there's been a move up in the Aussie. Possibly. No, that's not right, because there was a move down in the Aussie. Trying to figure out why we had that move. Is that a move down on the Aussie, or is it a move up on the New Zealand? Remembering which way round they are, guys. Because we're also seeing it there. Now, or did that happen the day before? 8th. That happened last week, guys. I'm getting that mixed up. That's on 4 hours. What was that other chart on? That was also 4 hours. I think I got myself a bit mixed up there because I saw that, folks. The move yesterday was actually flat here. So I don't think it was a big move in the Aussie. It was moved down. It was a move long on the New Zealand, which was right, because if you go back to your economics for this morning, well, I suppose I'm guessing that it was the... Okay, so we've got to do a little bit of research for the next 24 hours, guys, to find out was that move on the New Zealand or the Aussie, because it isn't blatantly obvious. Aussie CAD. It's been kind of ranging for a while, guys. If you're trading in here, it's going to be a long, slow process. Possibly it's going to come back up to the top. Swiss yen. No big move yet. No big move yet. Potentially looking for the other side of that. CAD Swiss. I might buy into this, guys, because it's running flat. It could well come back up into here. And as I showed you yesterday, my trading on the CAD Swiss over the last year has been 100% correct. We haven't got it wrong once in a year. Having said that, today will probably be the day I'll get it wrong. CAD yen also looking like it's starting to climb back up. New Zealand yen. Don't know. New Zealand CAD. There's a little bit of a push up there, but nothing to write home about, guys. Is it going to start to move up? Possibly, but I don't like trading against the CAD, you know. Although I did put the arrow in, but I wasn't brave enough to try and take it. And New Zealand Swiss, put the arrow in yesterday, and yet again I didn't take it, but let's see how it develops. Possibly that's a possible trade there. Okay, guys, as far as I'm concerned, I'm still gathering information about this, and I'm not going to, take too many risks on this at the moment. But at some point over the next, hopefully, week or so, we'll have a better idea of what's going on, and we'll find a few trades. And if I take any trades, I'll let you know, obviously, tomorrow. But I will start doing a summary of this, or maybe a summary of the trades. So we'll talk about things here, and then we'll do a little summary, and we'll go, well, here's, the information that we took out of the hour-long analysis that we did. And here's the decisions we made on it. And that would be nice, I think. We'll definitely do that. Okay, guys, that'll do us for today. I don't think there's anything I haven't spoken about other than remember Flipboard. Any news stories I see that are of interest, I flip them into Flipboard, Logic FX Trading, guys. And this is my source, along with Bloomberg, obviously, of what to look for, particularly with stocks, guys. This is more stock orientated, maybe a bit of gold and commodities in here, but it's mainly stock, where you find a story and you go, oh, let's have a look at that. And you have a look through it, and then you go see if you can trade them. ENB, for example. Now, yeah, we can. Enbridge. What's the research? They're saying it's a strong buy. Target 45, 14% above where it is now. What's the chart look like? Not overly enamored with that chart. Let's look at it in the 4 hours. Yeah, I'm not overly enamored with that, but do look at it's below, still below where it started out with the crash. So there is potential upside to it. Let's go back again. Statistics. PE ratio 16.83. Market cap 80 billion. Revenue 28 million. Earnings per share 2.3. It looks like a good company, guys. But we'll do a little bit more. I might actually just do a little video on that and put it out. I'll do that, guys. I'll put a video out on that. It doesn't mean I'm going to buy it, but let's go through the process. Okay, guys, that'll do for today. Speak to you all again tomorrow. Bye for now.